Okay, can everybody see that?
Yep.
Yes.
This was the email that we sent out, or you might have received a text message from myself or Chantel. So we've been doing these not every Thursday, but we try to do the Zoom chats on Thursdays when we schedule them. We're doing about every other week. This week's topic is on how you can be prepared to buy a home during or after the pandemic. We do have other videos that are posted on our YouTube. For example, the second video we did, we talked about some of the COVID-19 effects on the spring market, which I think this one will go kind of hand in hand with that. And then we've also done one on taxes and retirement, how you can pull taxes out to, pull some of your retirement if you have it.
For the CARES Act.
For the CARES Act and what they've allowed us to do because of the COVID effects. So if you are interested in that, you can always check out our YouTube and watch those recordings. There, again, we try to keep it under 30 minutes. So,
and this this will also be recorded. So just so you guys know.
Yeah. So we'll be putting this one on our YouTube as well. So today we have our guest speaker, Cassandra Farnese. She's a loan officer in Hollister, and you have an office in Salinas, right, Cassandra?
Correct, yes.
Yes. So we're going to be talking a little bit about the home buying process and getting pre-qualified. Right now, we just had one more come on. Getting pre-qualified now, or what we can do to kind of prepare, because there have been some changes in what we need to do, or different requirements. So Cassandra's going to touch on that. Chantel and I, we're a mother-daughter team. She's been in the business for about 21 years. I joined her about 3 years ago. And yeah, we just want to try and bring as much information to everybody as possible during these times. You know, there's a lot of questions, and my whole idea on this specific video is that a lot of us have a little more time on our hands than we usually do. So if we've ever thought about wanting to purchase a home, why not figure out what we can do to be ready, so that we can either kind of start the process now, or just be prepared, you know, because we have a little extra time on our hands to do some of the footwork to get qualified to purchase a home. So that is what our meeting is going to be about. And I'm going to go ahead and stop sharing and turn the floor over to Cassandra. Maybe you can talk to us a little bit about just the pre-approval process now, what's changed since COVID, what we're looking out for, even the, you know, I don't know if you want to break it down by category, like the VA loans or the FHA loans, certain things like that, that a lot of people are interested in using.
Of course, of course. So I'm happy to go over that. And actually just this morning we've been on, well, all day today, I've had 3 conference calls so far. So this is a very fluid and daily changing situation that we have in the market and in lending right now. To give you a little bit of background without, you know, getting into a lot of detail, what's happening with the lending side of things is that lenders and investors are concerned with home borrower default, with the whole forbearance options going on and what will happen after forbearance and people not working and will they be able to repay. It is giving the lending community flashbacks of 2008, 2009. So they have tightened up very quickly and very swiftly on the things that were the first to kind of default in that kind of market. This market, it is pretty standard. Everybody is of the mindset that it is not the same. It is more of a man-made situation than an economic situation, although we do have people out of work and, you know, trying to get things going again. So the biggest things that are affected right now as of today are your higher risk loans, those loans that have minimal to no down payment, which does affect a lot of the government sector. We talked about the FHA, VA, USDA, those kind of loans. Any of the down payment assistance programs, those type of programs have been suspended. And the reason that those are being suspended right now is the state programs have completely different guidelines for consumers that have requested forbearance. So lenders aren't able to guarantee, which is what they're looking for, borrowers' ability to repay in a market like this, and that is prohibiting those kind of loans. So a lot of the assistance that a lot of first-time home buyers are looking for is simply not available right now. They will need some kind of down payment and able to qualify for a mortgage. USDA is a 100% financing program, and that is still available, but it is only available in certain markets. So those people looking basically in South Monterey County, anything from Gonzales South, they would qualify for that kind of program. Salinas, Hollister, and some of those other areas are not,
So
qualified.
is the USDA, Cassandra, basically the same qualification standards as an FHA loan?
No, the USDA has very strict ratio, and they have income limits where FHA has no income limits to qualify. USDA does have income limits for family size. So that is what would depend if a borrower could qualify for that or not. They have tightened up on ratio waiver restrictions, which are some of them that we were able to kind of push a little bit more, but they're going to be pretty standard to income to debt ratio qualification. And then of course you have to meet the income limits for family size.
Okay.
That doesn't apply to FHA.
Okay, thank you.
Mm-hmm.
And thanks
so
for,
again,
I forgot to tell you that.
What's that, Chantel?
I said, and thanks for joining us today. I forgot to tell you that.
You're so welcome. So yeah, for first-time home buyers, and even for buyers that are selling a home and getting into another home, the biggest hurdles I would say that we're seeing right now is on a borrower that owns a home or owns any other properties, is verifying that all their mortgages are paid current. Borrowers who are in forbearance are no longer eligible for financing. So people have applied for and have received forbearance and have skipped payments. That could be an issue qualifying up to 12 months because you have to have a 12-month satisfactory pay history on mortgages. First-time home buyers don't have to, I'm sorry?
I was going to say that was one of our first Zoom meetings like this was on forbearance. And at that time,
Yep.
I didn't know how it was going to affect. And, people were pushing it to do it. And I just felt like at that time, I don't know how this is going to affect your credit. I mean, if you're behind on your mortgage.
Well, you know what the good thing is we're seeing actually, because of course rates are still really good. So that's a plus.
Mm-hmm.
We're still getting a lot of refinance activity, and people have applied for forbearance pretty much as a maybe if I need it kind of thing. It rates on your credit. It's showing that the loan is in forbearance, but it doesn't rate late payments. And people are still making the payments. So I'm kind of waiting for some updated numbers for that to see kind of where it's headed out, because I think that it'll be a lot better than what we're and the industry is anticipating. So, like I said, first-time home buyers, they won't have to worry about that. They don't own anything right now. They don't have a mortgage yet, so they don't have to worry about meeting that hurdle. But they will have to get into some down payment. So we still have the ability. A lot of our programs allow for 100% gift. So if you maybe don't have the money yourself, you have somebody that does have the down payment that can assist you with that. That is still eligible. Credit score restrictions have tightened up a little bit, where we could go down to a 580 credit score or even lower in some circumstances. We're pretty much capped out at a 640 right now. So checking your credit, knowing what you have, and making sure that we can identify specifically accounts that you might be able to work on to bump up your score, that would be really important. And if you're a self-employed borrower, there's added restrictions on that as well. So depending on the program, you could either have your self-employed income reduced by 25% of what it actually is to allow for the impact of our current market. Or if you have disposable assets that you would have post-closing, what we call reserves, those sometimes will allow you, if you have enough, to still qualify with 100% of the income. So those are kind of the biggest things that we're seeing them looking at right now. Like I said, credit's tightened up a little bit, not so much the lower credit scores. You're not going to get a lot of the down payment assistance stuff out there. And if you're self-employed, there's some hurdles that we have to meet there. So other programs, if you're an investor looking to buy an investment property, some of that stuff has tightened up as well. And if you're refinancing at all, looking for cash out, that's pretty much out of the books right now too.
Well, you had mentioned to me about, because you were helping a buyer on that property I have that in Hollister that's over $1 million. And you have like conforming, non-conforming. Can you kind of talk about that a little bit? And then also talk about your alternative as far as the financing options that you have to be able to assist somebody with that type of loan?
Of course. So one of the other areas that have really tightened up is the jumbo lending side, which would be any loan amount over $765,600, or for Monterey County, any loan amount over $672,750. And what that means is those jumbo investors have pretty much pulled everything back, tight to the fist. There's no jumbo market right now. So for a purchase of a higher price home, what we have been able to do is we work them as a first and second mortgage. So we can do those up to 90% combined loan to value, which would give the home buyer a 10% down payment, and they would have a first mortgage and a second mortgage. The second lenders that we're working with will go up to $500,000. And of course, borrowers typically have to have pretty good credit, 700 and above, to qualify for those types of mortgages.
Right.
So what about if someone doesn't have the credit score because they've tightened up on these credit scores and we don't really know when they'll go back to the way they were? What can someone do, or is there a possibility? Does it automatically cancel them out, or are there things that they can do?
Yes, there's definitely things they can do. What I'm telling everybody right now is kind of how you started out, Betty, is if you're even thinking that you may want to purchase a home, now within 6 months, whatever the time frame is to get pre-qualified. What I do is with our credit reports, we have a way to run what's called kind of a what if scenario or a wayfinder, and I can plug in exactly the score that I need, and it will specifically tell me what credit accounts or anything that's on there that we can do immediately to fix your credit or, up your score. What I find home buyers make big mistakes with is that they think, I know I got to work on my credit, so I'm going to pay off some debt, and that'll make me better. And it doesn't always work. You don't want to spend your money if you don't have to spend your money. So, work with a loan officer and determine what will get you the most bang for your buck that you can pay off or pay down. Or, sometimes I had a couple actually just this week where they just had to be removed as an authorized signer on a couple of other accounts. And their score went up 20 points.
Recently, yeah.
Yeah, so it was zero money out of pocket, and that bumped their score, and they were, were able to get a really good rate.
I remember one, it bumped their score like 10, 15 points, and one of the little things they had to do was put a $10 balance on one of the cards.
Yeah,
So
and
that's what that's like one of my first things I tell buyers too, is don't touch if you're worried about your credit score, don't touch it until you talk to a lender. Now, going hand in hand with that, when they talk to you and they talk about their credit score, a lot of people are concerned that will affect their credit score negatively when you pull the information. So how does that work?
Well, an inquiry does affect your credit. So you want to make sure you're not out, shopping for a bunch of stuff and getting credit cards and applying with 12 different lenders. But the inquiries, what I'm told from the credit bureaus is that if you apply for the same type of inquiry within a 30-day period, it only will impact your credit score one time. And then, of course, if you just have that one and you don't apply a bunch more, within 30 days or so after that, the impact is kind of gone. It comes back to where it would be.
Okay.
Like if you talk to a lender and you want to talk to another lender and they rerun your credit, then it's not going to ding you.
Do it within the 30-day period.
Within the same 30-day period, right.
That's good information. I didn't know that.
Mm-hmm, mm-hmm.
another thing I was curious about taxes, because maybe some people are taking advantage of not filing their taxes until July. Is there any way that affects people's pre-qualifications, or how does that work?
It can. So especially for the self-employed borrower, I talked a little bit about how there's a lot of, more eyes looking at a self-employed borrower. If a borrower hasn't filed their 2019 taxes yet, they would have to, for a self-employed borrower, they would have to give me a CPA prepared profit and loss statement for 2019. And the underwriter is also going to look at their most recent 4 months business bank statements to determine the cash flow of that business. So, if things are slower right now, maybe the cash isn't coming in because of COVID-19 and that kind of thing going on, that could negatively impact them. So for a standard wage earner, a W-2 borrower, not so much, because typically I don't even need the tax returns if we're just using wages to qualify.
Okay, so mostly for those
self-employed.
Self-employed.
Mm-hmm,
okay.
Mm-hmm.
So basically, I mean, we're coming up to the last 10 minutes, and I don't know if anyone has any questions that they want to ask Cassandra. Anything about getting pre-qualified or anything for us. If you want to either text them to me if you have my phone number, or there's the chat in the bottom, or you can unmute yourself and speak. So I'll give people a chance to do that. But while I'm waiting for any questions.
I have a question real quick.
Okay.
So with the people that have been laid off due to the COVID, Cassandra, how is that affecting loans right now? Because they're furloughed, they're eventually going to go back to work, but how is that affecting everybody?
Well, if it's a pre-qualification, what I'm doing is asking them to get me their pay stubs before they went on leave, layoff or furlough, because I want to qualify them with real numbers that they're used to earning. Plus, I'll have their last year's W-2s. So as far as seeing what they would qualify for to buy a new home, zero effect. But if they want to go into contract right away, they have to be back to work. So I don't need them back to work immediately, but if the employer would write us a letter saying, Chantel has been off from this date to this date due to COVID or whatever the situation is, maybe it's, some medical situation, that is fine. And then we would ask for the pay stub before we would go to docs, or sometimes I can even get it prior to funding.
Oh, that's good to know.
Yeah.
We have a question. Joe Zamora, I'm going to unmute you. Did it work? Here we go.
Yeah.
Thank you. My question is, if I'm trying to sell my house that I currently live in and purchase another one, does it benefit me at all to go through my current lender who's doing my mortgage? Would that save me any time?
No. So your current lender is going to be the same as any other lender out there as far as a new loan for a new purchase. It's all going to be brand new. You won't be able to use anything from your refinance you did or any benefit from that transaction for the new one.
Something to add to that too that I noticed is if it's like a big bank, they have a lot more, they're a lot more, what's the right word? Conservative, right, with what they will approve. So sometimes it's better to talk to someone that is, has their own mortgage practice, someone besides just the big banks, at least to talk to them and see what they're able to do for you, because they might be able to help you more so than just reading your application and saying, oh no, you don't fit in our type of box that we're looking for.
Well, right. And back in the day when you went to your home bank, it was different because it was more like a portfolio lender. And, they knew you, they had your bank accounts, but it's different now. I mean, even the one client, remember in January, Cassandra, they went to their
bank.
To their bank because they had all their assets there. It was supposed to be a slam dunk, and it ended up being a nightmare. So I had to pull the loan and send it over to Cassandra. But he thought he was going to get a better deal because he was going through his lender. And it was, I won't say the bank, but it was one of the top 5 banks in the United States.
Yeah, and just to give you an idea, because of my background, I've been doing this a long time, and so I I get updates. I'm kind of set up with all the banks and other lenders out there. I see stuff coming in. I know what they're doing. I kind of can keep my eye on the market. And specifically, you know, Chase, Wells Fargo, and some of the other banks that are out there, they have tightened up in this market more so than a lot of other companies, because they acquired or purchased some of those banks that had significant loss before in the 2008, 2009. So they felt it hard. They're still recovering from that, and they've backed up, you know, they've tightened up a lot more because they don't want to get hit with a lot more risk. So they've pretty much eliminated stuff like cash out refinances, and a lot of the government stuff is just significantly tightened up. So you may have an existing relationship with them, but like I said, when you go in for a new loan, you're just like the other guy that's coming in too, and you're kind of just going into there. You're gonna have to provide all your documents, and you'll get whatever the current market rate is that everybody would get.
Well, didn't Chase just announce that they wouldn't do loans if people had under like a 700 credit score?
Yeah, I'm seeing 680 and 700 pretty across the board with the banks right now.
Well, thank you. Does anybody else have any other questions?
Hi, Elena.
So I guess maybe we can just kind of summarize. We have 5 minutes. If anyone else wants to raise their hand or anything, feel free. But, you know, I think that being prepared to buy a home, either in a pandemic or not, the main thing is that we really have to see where we're at financially, and the first person to go to is a lender. That's always been the case, and that still is the case with COVID. If we're furloughed right now, we couldn't close on a transaction. We do have that going on with some buyers that we have right now. So we're just basically waiting for them to go back to work and for them to do what's called a verification of employment. That's what the lender will do. And they call and verify that you're working. And I think he needs a 40-hour pay period, whatever his typical pay is. So once you have that, then you can close on the transaction. So that's kind of one of the, you know, hangups in a transaction. But there are ways to improve your credit score, and you know, once you go from there, you kind of just get prepared. We can do we call them buyer consultations, where we'll meet with you and we'll kind of talk about the home buying process. If you've never purchased a home, that's an important step specifically, because we can give you, you know, some details on the transaction process and all that. So we're all learning, but I appreciate everybody coming on today. And Cassandra, you were really informative.
Sure, and I don't want to make it sound all doom and gloom. I mean, it's kind of, we've got hurdles to go over right now, but there are still low down payment programs, 3%, 3.5%, depending on your qualifications. And like I said, it can come from gift funds. So if you don't have your own funds, a family member can gift you some or all of it if they need to. And the ratios are still workable. And so you want to be with someone that kind of knows their way around in the ins and outs of helping get you into the box that we need to be in right now to get you qualified.
I had one other question and I forgot what I was going to ask you. I'll have to think about it. Oh, one of the things is I was getting a private message. And do you do loans outside of Monterey County and San Benito County?
Yeah, I lend in all of California.
Okay.
All right, we have another raised hand. Kayla, I'm going to unmute you.
Hi, thank you. So the question that I have, and you guys may have covered it, I joined the party a little late. As far as work history and being approved for a loan, how does that work? My husband and I just recently accepted new jobs where the pay is significantly more, which is good for us. However, we don't have the, 1 year job history or 6 months job history proving that, it's true and real for a long period of time.
It basically depends on what you were doing before. So I do loans all the time. If you are in college or getting your education for your job that you have now, that meets the 2-year employment history. If your new jobs now are salaried positions, you have an offer letter or something like that that's going to tell us how much you make, I would use your new income to qualify. So it just kind of depends on what the history was prior to you getting the new job.
Okay.
Does that help?
No, yeah, that answers my question.
Okay, good.
So for example, can you give us an example of, like, if you were doing, say you were in sales at a whole different company and you were salaried, and then you went into sales for another company, but it's a different type of sales. Would that count as the same line of work?
It would if you're still salaried. So where you would run into a problem is say your job before was salaried, like you said. So you had a guaranteed pay, every paycheck, everything was great. And then you changed and you go to a new job that's commission only. And so your income is going to vary. That gets a little tricky is because then we need to try to establish, well, what are you going to make? You've never been in a commissioned position before, so we don't know what your earnings potential is. Doesn't mean that we can't do the loan. We may have to get a little bit more granular with your employer. Do they have any type of guarantee for your commission? Do they kind of know what you make? There's things that we can do to make that work. So it just depends. Like I said, it all depends. And there's been a lot of different variations. Even if you change lines of work, you were doing something completely different before, but we can write a letter and document how what you did relates to this new position you have.
Okay.
It's just packaging it up and putting it together so that it makes sense that we can use what you're doing now.
So, like, for example, I have a client that he worked at the prison and then he got a job as a parole officer.
Mm-hmm.
So that would kind of be the same line of work.
Yep, I would have no problem with that.
Okay. That was a good question, Kayla.
Yep.
Well, I think we should wrap it up unless anyone else has questions. Cassandra had posted in the chat her contact information, but feel free if you don't find it there to give us a call or text and we can get that over to you, and she can answer any other questions pertaining to your specific situation.
Of course.
But yeah, thank you everybody for joining. We're really excited. And again, we're gonna post this on our YouTube. If you look up Homes by Henson on YouTube, it'll come up with all the videos. So maybe give it, I don't know, I'll work on it this afternoon. So probably by tomorrow, we'll have this recording up. And there are 2 other recordings. And another thing, if anybody has any other questions, we're trying to do these videos to feature the effects of COVID on real estate, any questions relating that, we can always use it as a topic in further Zoom chats. So same thing with you, Cassandra, if you ever, have any other good ideas that you'd want to, kind of touch on, let us know.
You got it.
All right. Well, thanks everybody for joining. It was nice to see you all.
Thanks. We'll see you guys.
Yeah.
Bye.
Thanks for your participation. Talk to you later.